following segment is sponsored by North Star Financial and Retirement Planning.
Taxes could cost you far more in retirement than you realize, but many of us simply put off taking that deep dive into our tax situation. Joining us now are George Fossing and Zach Jenkins. They're part of the team at North Star Financial and Retirement Planning, a local area firm that focuses on preparing people for a successful retirement. George and Zach, also popular radio show hosts, joining us in studio. Good morning.
Good morning. Good morning. Good to see you, Margaret.
Good to see you. First thing, what can we be doing to potentially lessen our tax burden in retirement? I'm sure this is a lot.
Big question, right? Especially after tax season. We just got done with that. Now we're moving forward for next year.
Yeah.
How'd you do? So what we've seen out there is people have been calling us, wow, this is always the wake-up call, right? You write your checks out, you realize how much you paid in taxes. It goes, and it's the middle class that are taking the hit, right? Always the middle class. So what you're looking at doing is when you go to a tax professional, what are you asking them to do? Prepare your taxes for the year, right? For last year, clean it up. But we do the forward thinking. We want to reduce future taxes. So you have to be in front of it and start looking at this. This is especially important for people with large IRA accounts or 401ks, these tax-deferred accounts. So we call them tax time bombs. So what that means is you're just deferring the taxes. You're going to have to take the money out sooner or later, and the government's going to be sitting there waiting. In 2026, tax rates are going back up to where they were, higher. So right now is the ultimate time to really get yourself as close to the 0% tax bracket as possible. And you do that doing Roth conversions, which is taking these taxable accounts, paying taxes, and putting them back into tax-free forever.
Any strategy to avoid this tax bomb?
It's huge.
Is it possible to receive retirement income on your nest egg without paying income taxes?
Well, we talked about this a while ago, and I like to use this example. We've got a client in here, a walking, talking human being right here in the upstate, and he has $90,000 a year of tax-free income. Tax-free, 100%. It's all his, and that's taken planning on his part. We've been working with him for a number of years, but that's a great illustration of how to get there. Even if you're not 100% tax-free, pay less in taxes over time. That's good because the impact is profound. The more you pay, the more they're getting. We found that out recently. Is what they're doing is they're tightening up ways to really mitigate taxes, and the government's coming in after more and more and more.
They're getting smart.
They're getting smart.
Well, this is worth delving into then, because we spoke to you recently about the new IRS guidelines that make you take your inherited IRA distributions every year, and then this has to be emptied by the 10th year. Talk about the impact of that.
You know, it's almost like a game, and it's not that fun to play, but you have to be up on it. I mean, they keep changing the rules. So, what this new rule is saying is that when you inherit an IRA, maybe from like a parent, well, you used to be able to stretch that out and take the distributions of your lifetime. Now you have to deplete the account within 10 years. And now they're saying that you've got to take a distribution every year and just deplete it by the end of that 10th year. So for a lot of folks, that could really put them in a situation when it comes to their taxes. We're working with a couple right now. He's 62, she's 58, and just retired a couple of months ago. And one of their biggest concerns is health insurance between now and both of them getting to 65 and going on Medicare. Well, she just inherited a rather large IRA from her dad, and they're going to have to start taking distributions on that, and it's going to throw a wrench in there from a tax planning and health insurance standpoint. We've got to put together a plan to minimize the taxes and now the health insurance cost.
That's one illustration every week, over and over and over.
Well, and it's just good that you can stay up with the rules of this game, the rules that are always changing. How often do you find that retirees and pre-retirees are just overlooking their tax situation?
Almost every time. They come in, we hear the ultimate, I wish we knew this 10 years ago. I wish we did this 10 years ago. Because they start looking at this. We get it. We understand people don't want to deal with this. But sooner or later, the government's going to come take it. Like it or not, at age 72, it's called required minimum distributions. And folks out there know what that is if you're over age 72, and they dictate the terms. And you really don't want to get that. So if you're between the age maybe 59 and a half and 72, it's an ultimate best time to look at the strategies out there. And it's important. You know why? Really because somebody might have $1 million in their IRA. How much of that is theirs? We don't know. It's what the government says you get to keep.
It sounds frightening, and I understand why people put it off, but they don't have to. They can have an easy conversation with you about it, right?
Easy is the big word. You're right. Just kind of come in and look and see if they're a candidate for it. We tell people if you're married, have over $500,000 in a tax-deferred account, that's your IRA 401k, really good opportunity to do that. $300 if you're an individual. So you're looking at this really the people, if you believe taxes are going to go up, you want to pay as least amount as possible, you need to get on it now while I guess taxes are cheap.
Well, nobody's going to regret having the conversation and learning about their options, so we appreciate the discussion. It's
Yeah,
an important one.
and again, this is complimentary.
Yep. All right. George and Zach, thank you so much for being here.
Thanks,
People
Lawrence.
are going to love to work with you. Anybody watching, if you're at home, if you're currently retired or getting close to retirement and you'd like to learn more about how you could potentially reduce your future taxes, as well as help to protect and grow your hard-earned savings and investments, North Star Financial has a great offer for you. Right now until June 26th, they're offering a complimentary no-obligation investment portfolio and tax planning review. This will allow their team to schedule a phone call, video call, or future in-office meetings so they can speak with you personally and provide you with a roadmap going forward. The number to call now, area code 864-309-8146.